All right, so you want to know about this Oriental Kopi IPO, right?
Yeah.
You handed us a whole stack of documents,
Mm-hmm.
their prospectus, some market research,
Looks good.
and the big question
Yeah.
is this a good investment?
Mm-hmm.
Or should you stick to your regular Kopi?
Well, you've definitely given us quite a bit to look at here. I
Sure.
think the prospectus especially is really going to be key for getting into the real nitty-gritty of Oriental Kopi's financials and their plans.
So maybe we should start with just like a really basic overview.
Mm-hmm.
Who is Oriental Kopi and what are they all about?
So they're pretty interesting, actually. Primarily, they are a cafe chain operating in Malaysia.
What?
But what sets them apart, I think, is their packaged foods business. So they're selling coffee, tea, snacks, all with that Oriental Kopi branding.
So it's like a Starbucks that also wants to be in your pantry.
Yeah, they're aiming for that grab-and-go market,
Interesting.
not just the cafes.
I noticed they've even got different logos for the cafes versus the packaged goods. It seems like they're really serious about building up both sides of the business.
I think that kind of attention to detail is a good sign. It shows they're thinking strategically about their brand
Mm-hmm.
and how they want to present themselves to
Right.
different segments of the market.
Okay, so we've got a company with two distinct revenue streams, cafes and packaged foods. Let's talk about this IPO. What are they hoping to achieve by going public?
Well, they're looking to list on the ACE market of Bursa securities.
Okay.
Think of it as a launch pad for emerging companies with high growth potential.
Mhm.
It's a little less stringent
Yeah.
than the main market, but still a big step for a company like Oriental Kopi.
And they're offering 418,101,000 new shares at RM 0.44 each.
Yeah.
That's a lot. That's a big chunk of the company, right?
It is. It represents about 20.91% of the company after the IPO. But here's where it gets really interesting and potentially concerning for the average investor like yourself. Only 3% of those shares are being offered to the Malaysian public.
Only 3%. That's not very much.
It isn't. We're talking just 60 million shares, with at least half of those reserved for Bumiputera investors.
Okay.
So competition for those shares is going to be fierce.
So it's kind of like trying to get a limited edition blend of coffee. High demand, limited supply. That's going to affect the price, right?
Absolutely. That scarcity could lead to a significant price jump post-IPO,
Yeah.
sometimes called a new listing premium.
Okay.
We'll need to analyze this further
Yeah.
when we look at their valuation, but definitely something to keep in mind.
Okay, so potentially high demand for a limited number of shares. Let's talk about the people behind the scenes. Who's steering this ship?
So the captain at the helm is Dato Chan Jianchern, the managing director. He's joined by two executive directors, Chan Yenmin, who oversees finance, procurement, and HR, and Koei Song Leng, who's responsible for operations, warehousing, and logistics.
I noticed that Dato Chan has kind of an interesting background.
Yeah.
He comes from the world of mobile phones.
Right.
Founding companies like Tenggara Telecenter and Mars Mobile Distribution. Quite a change from brewing coffee, don't you think?
It is. It is indeed. I think this can be viewed in two ways.
Okay.
On the one hand, his experience in building and scaling businesses, that could be a major asset for Oriental Kopi.
Yep.
He understands the challenges of a competitive market,
Right.
and he knows what it takes to grow a company. But on the other hand, his lack of direct experience in the F&B sector, that could be a concern, There's a unique set of challenges in this industry.
Yeah, I guess like managing.
Supply chains,
Yeah.
dealing with, perishables, understanding consumer trends
Like,
that he may not be fully prepared for.
so his past experience is it's kind of like a double-edged sword.
Exactly.
It's up to us to figure out if those past successes translate to the world of coffee and snacks.
Exactly. And that actually brings us to, I think, the next crucial aspect, risk assessment.
Okay.
Every investment comes with its own set of risks, and Oriental Kopi is no exception.
The prospectus actually outlines some key areas of concern, doesn't it?
It does, yeah. One major risk they highlight is their reliance on third-party suppliers. They source their coffee beans, tea leaves, packaging materials, and other crucial ingredients from various suppliers.
Right.
So any disruption in that supply chain, be it weather events, political instability, or even just, supplier issues, could significantly impact their operations.
So if their coffee bean supplier has a bad harvest or their packaging supplier has problems with logistics, that could really affect their whole operation.
Precisely. And that's particularly relevant when we consider their expansion plans, both domestically and internationally.
Yeah.
A more complex supply chain, more moving parts,
Hmm.
adds another layer of vulnerability.
We also can't ignore the competition. The Malaysian cafe market is really crowded. Big players like Starbucks, Old Town White Coffee are already established, not to mention all those independent cafes. Can Oriental Kopi really stand out and maintain their growth in that kind of competitive environment?
Well, that's the million ringgit question. They're betting on their unique blend
Yep.
of traditional Malaysian flavors with a modern cafe experience
Okay.
to set them apart. But whether that's enough to win over customers in the long run, that remains to be seen.
There's also the issue of their recent health and safety incidents,
Right.
like temporary closures due to hygiene concerns, and even that immigration raid with foreign workers. These incidents, they raise some questions about their operational practices and risk management.
These are serious concerns that can't be brushed aside. It suggests potential weaknesses
Yeah.
in their internal controls
Yeah.
and raises questions about their commitment to compliance.
Yeah.
For an investor, this translates to reputational risk,
Yeah.
negative press and public perception that can significantly impact a company's brand image and ultimately their bottom line.
Now, they did address these issues in the prospectus, outlining steps they're taking to improve their safety and compliance procedures. But actions speak louder than words, right? Investors will be watching to see if they actually follow through.
Absolutely. It's not just about talking the talk. They need to walk the walk.
Yeah.
Especially for a company aiming to attract investors, transparency and accountability are absolutely paramount.
Another risk factor that they highlight is the fact that there is no prior market for their shares.
Right.
This is a brand new listing, so there's no historical data to see how investors might react.
It's the inherent uncertainty of any IPO.
Yeah.
It's a bit of a leap of faith for investors.
Right.
While the potential for high returns is definitely there, so is the risk of volatility and limited liquidity, especially in the early days of trading.
Okay, so we have a company with an interesting business model,
Yeah,
ambitious plans, lots of potential,
for sure.
but also some pretty significant risks to consider. Well, I think we need to look at their financials and see if the numbers back up their story.
Yeah, let's move on to their financial performance.
All right.
This is where we separate the hype from reality. We determine if their impressive growth figures are built on, solid foundations or shaky ground.
Let's brew up some financial analysis and see what we can uncover.
Let's do it.
Okay, so we've kind of gotten an overview of Oriental Kopi,
Yeah,
ambitious, a bit risky, definitely interesting.
right.
But can they back it up with their financials? That's what really matters in the end, right?
Absolutely. A compelling story is one thing.
Yeah.
But solid financials are what ultimately determine a company's long-term success and whether it's a worthwhile investment. So let's dive into those numbers.
All right. The prospectus shows some really impressive revenue growth. A CAGR of over 280% from 2021 to 2024.
Wow.
That's a steep climb as it's cracked up to be, though.
Well, that's what we need to unpack, right? High growth figures, they can be very enticing, but it's essential to understand what's actually driving that growth. Is it sustainable, or is it a temporary surge, fueled by factors that might not last?
So they're operating in two main segments, cafes and packaged foods.
Right.
Do we know how much each of those is contributing to that overall revenue growth?
The prospectus does provide a breakdown, and it's no surprise their cafe operations are the primary revenue driver.
Yeah.
But there's a crucial detail we need to consider here. How much of that cafe revenue growth is from existing stores increasing their sales versus simply opening new locations?
So it's like the classic organic growth versus just expanding your footprint.
Exactly.
Opening more cafes will naturally bring in more revenue,
Right.
but that's not necessarily a sign of a thriving business model.
Exactly. Ideally, we want to see both
Yeah.
healthy balance between existing stores performing well and new stores adding to that overall growth.
Right.
Unfortunately, the prospectus isn't very clear on this. It provides the overall store count, but it doesn't break down revenue by store age or type.
That lack of transparency there, that's kind of a red flag, isn't it?
Yeah,
It makes it harder to assess the true health of their cafe business.
it does. It does raise some questions. Are they attracting more customers
Right.
to their existing cafes, or are they simply relying on opening new locations to boost revenue? We really need more data
Yeah.
to make a definitive judgment.
Okay, so the revenue growth needs a closer look.
Right.
What about their profitability? Are they turning those sales into actual profit?
Right. Let's examine their profit margins. While revenue has grown significantly, their cost of sales has also risen sharply.
Okay.
A significant portion of that is attributed to material costs, so ingredients for their beverages and food,
Okay.
and finished goods for the packaged foods.
That makes sense considering the kind of business they're in.
Right.
But we also can't forget about inflation.
Right.
Food costs have been on the rise. How are they managing that pressure?
Well, they do acknowledge in the prospectus their reliance on third-party suppliers, which exposes them to price fluctuations. If they're unable to negotiate favorable prices or pass on those increased costs to consumers, their margins could take a hit.
So it's a delicate balancing act.
Exactly.
They need to keep their prices competitive to attract customers. But they also need to manage those rising input costs to protect their profitability.
Precisely. And that's where analyzing their administrative and other operating expenses becomes crucial.
Okay.
We want to understand how efficiently they're managing their overall operations.
Looking at the numbers, those expenses have been increasing as well. Is that just because they're expanding, or there are other factors going on here?
Well, expansion does play a role, of course.
Yeah.
Opening new cafes, growing the packaged foods business, that naturally leads to higher operating costs.
Sure.
But we need to scrutinize the composition of those expenses.
Right.
Are they investing strategically in areas that support growth, like, marketing, technology, R&D, or are we seeing inefficiencies and runaway costs?
It's like that extra shot of espresso.
Yeah.
Sometimes you need it, but too much can make you feel jittery and out of balance.
That's a great analogy.
Thanks.
And, looking closely, their staff costs have increased dramatically, particularly in 2023. While some of that is likely due to hiring for new locations, it's worth remembering those past issues they had with foreign worker compliance. Those incidents can lead to, fines, legal fees, reputational damage, all of which adds to their expenses.
So it's not just about hiring more people, it's about managing their workforce effectively and ethically.
Yeah.
Those compliance issues could be a sign of deeper management challenges.
Indeed. Now, putting all of this together, the bottom line is, are they actually making money? The answer is yes. Their profit after tax has shown growth. But the real question is, how profitable are they compared to their peers?
So their net profit margin, the percentage of revenue that becomes profit, seems to be around 15%.
Yeah.
Is that good?
It's relatively thin, especially compared to some of their listed competitors in the F&B space. This suggests that they might not be operating as efficiently, or that they're prioritizing market share gains over maximizing profitability at this stage.
It's interesting that they've also been paying dividends to shareholders.
Yeah.
That could be attractive to some investors, but does it affect their ability to reinvest in the business?
That's a valid point.
And fuel further growth?
Dividends can signal confidence, reward shareholders.
Yeah.
But a young, growing company also needs to carefully balance those payouts with reinvesting profits back into the business to fund expansion, R&D, and operational improvements.
So we've got revenue growth that needs more scrutiny, potential pressure on margins, and a net profit margin that's not as impressive as it could be.
Right.
What does all this mean for their valuation? Are they asking a fair price for their shares?
Right. Let's move on to the heart of the matter, valuing this IPO.
Okay.
We need to determine if that RM 0.44 per share price tag is justified, or if investors are just getting caught up in the hype.
They're listing on the ACE market, which is meant for emerging companies.
Right.
But their price-to-book ratio seems a bit high compared to some of their peers on that market.
That's correct. The price-to-book ratio, or PB ratio, compares a company's market capitalization to its book value, which is essentially the net asset value of the company.
Okay.
A high PB ratio often indicates that investors are willing to pay a premium for the company's shares, betting on future growth and potential.
So in this case, their higher PB ratio suggests investors are optimistic about Oriental Kopi's prospects.
Right.
But is that optimism warranted?
That's the key question. There could be valid reasons for a higher PD ratio. Perhaps they have valuable intangible assets, a strong brand, a loyal customer base, unique recipes that aren't fully captured in their book value.
Or it could be that new listing premium we talked about earlier.
Oh, exactly.
That limited public offering could create this artificial scarcity,
Right.
drive up the price, at least in the short term.
Exactly. It's crucial to disentangle these factors
Yeah.
and determine if that premium is justified by their fundamentals or fueled by speculation.
Right.
This is where deeper analysis and due diligence are essential. We need to carefully consider their financials, their growth prospects, the risks involved, and the broader market context
Right.
to make an informed judgment.
So we've crunched the numbers,
Yeah.
highlighted some potential concerns, and explored the complexities of their valuation. Now I think we need to step back and consider the industry landscape.
Yeah.
How does Oriental Kopi fit into the big picture of the Malaysian F&B market?
Right. Let's shift our focus to the industry trends and the competitive dynamics that will ultimately shape Oriental Kopi's future.
All right, so we've kind of dissected Oriental Kopi's business model, scrutinized their financials, and even poked around for potential red flags.
Right.
Now let's zoom out a bit.
Mm-hmm.
What's the overall outlook for the Malaysian F&B industry? Is it a good time to be a cafe chain?
Well, the independent market research report you provided, it actually paints a rather optimistic picture.
Okay.
The Malaysian F&B services market is on an upward trajectory,
Okay.
driven by, rising consumer spending
Yeah.
and a rebound in tourist arrivals.
Right.
People are eating out more,
Right.
and they're willing to spend on experiences, including that, perfect cup of coffee or a tasty snack.
That's good news for Oriental Kopi, right?
It seems that way, yeah.
They're riding this wave of positive trends in the market.
Yeah, but there are always challenges to consider,
Sure.
The report also highlights some potential headwinds, particularly inflation. Oh, right.
Rising food costs are a major concern for any F&B business.
Yeah.
And Oriental Kopi is no exception. They'll need to manage those cost pressures carefully, especially with their reliance on third-party suppliers.
And we can't forget about the intense competition in the Malaysian cafe market.
Right.
We talked about the big players like
Right.
Starbucks and Old Town White Coffee.
Yeah.
But there are countless other chains and independent cafes out there,
Absolutely.
all vying for those same customers. How does Oriental Kopi plan to stand out from that crowd?
Well, their strategy seems to be a blend of, I guess you could say, familiarity and novelty.
Okay.
They're tapping into that rich heritage of Malaysian coffee culture.
Yeah.
And Kopi O, Teh Tarik, those
Yeah.
classic flavors that resonate with local consumers.
Mm-hmm.
But they're also packaging those familiar flavors
Yeah.
in a modern cafe experience
Oh.
with, sleek interiors, trendy menu items, and a focus on convenience
Yeah.
for that grab-and-go market. So they're trying to appeal to both, like the traditionalists
Yeah.
and those who are seeking maybe a more contemporary cafe vibe.
Exactly.
It's a clever strategy,
It is.
but it remains to be seen how effectively they can execute it.
Indeed. And their expansion plans really hinge on this delicate balance.
Yeah.
They're aiming to open 14 more owned operated cafes in Malaysia by
Wow.
2026,
Okay.
which is a bold move in such a competitive market.
Yeah.
They'll need to choose their locations very strategically and ensure that each new cafe maintains the quality and consistency that, defines their brand.
Right.
And they're not just sticking to Malaysia. They've already ventured into Singapore
Yeah.
with the joint venture with Paradise Group,
Yeah.
a well-established F&B player in that market.
Yeah.
Expanding internationally can be very lucrative, but it's also risky.
For sure.
It requires a deep understanding of local tastes and preferences, as well as the ability to adapt their menu and operations to suit a different cultural context. Right. Their partnership with Paradise Group, I think, suggests they're taking this expansion seriously and leveraging local expertise,
Wow.
which is a positive sign.
So to kind of sum it all up,
Yeah.
we have a company operating in a growing market, but they're facing some intense competition,
Right.
some cost pressures.
Yeah.
Their financial performance shows some potential, but also raises some red flags.
Absolutely.
Their valuation seems optimistic, but there are those intangible factors to
Yeah.
consider. It's complicated.
Yeah, that's the nature of investing, isn't it? There's
Yeah.
always an element of uncertainty,
Right.
a blend of potential rewards and inherent risks. We've kind of explored the key ingredients of this particular investment opportunity, but the final decision rests with you.
Well, you've given us a lot to think about. We examined their business model, their financials, the risks,
Yeah.
the opportunities,
Absolutely.
and the broader market context. Now it's time for everyone out there to kind of brew up their own conclusions.
Yeah, remember, this is just a starting point.
Right.
Armed with this information, you can delve deeper into Oriental Kopi's story, conduct your own research, and really weigh those potential rewards against the risks.
Yeah.
Ultimately, you need to decide if this IPO is a blend that suits your investment palette.
Well, thanks for joining us on this deep dive into Oriental Kopi's IPO.
Yes, thank you.
I hope we've given you the insights you need to make an informed decision.
Absolutely.
Happy investing.
Happy investing.